Hi Ben, thank you so much for doing this interview with me, I'm really excited to be here with you and hear your thoughts on money, that positive, wonderful thing which over time has become quite negative and distasteful to money. As many of my readers know, you are the founder of Positive Money, which is a social enterprise, or is it a charity?
We're a not-for-profit.
Non-for-profit, okay. And it's all about educating people about how money's created, right?
Yeah, we're trying to get people to understand how the monetary system works and why it's not working correctly at the moment. What all the kind of problems that causes and what we can actually do to fix those problems.
Excellent. And so what brought you, what created this cause? What created this fire in your belly to create this non-profit and go out there and share the message, share the money word?
Well, I think it was about a year before the financial crisis started. I read a book which explained how money was created by the banking system and how every loan that a bank makes actually creates new money. And this book showed a chart of the amount of money in the economy going just up like this, and also house prices going up at the same kind of rate. And it made sense to me that was explaining why house prices were going up so quickly between 2004 and 2006 when I read the book. But also it seemed like if that was the way the system worked, it can't last. It's not built on a good foundation. And so that was 2006. 2007 was when the financial crisis started in the UK. And then 2008, everything really kicked off. And for 2 years, I watched the press and the media and all the coverage of what was happening, assuming that they would now start to talk about this core problem about how money is created. And after 2 years, nobody had really mentioned it in any of the the millions of pages of analysis of what was happening in the financial crisis. Nobody had talked about how money is actually created in the first place. So in 2009, I said, well, if nobody's going to talk about it, I'm going to try and get the message out. So I started a blog, bendyson.com, started writing about that. After about a year, there was a few hundred people who were following that, and then I said, well, there's nothing I can do on a significant scale with just a blog. We now need to start a real campaign. So that was when we started Positive Money. And then we've been running 3 years now, and it's just kind of grown from there.
It's excellent. But I mean, you've got chapters in Brighton, is that correct? Or is it
Yeah.
all over the country?
Yeah, there's small groups around the country. There's a group in Newcastle, a group in Cardiff, in Brighton, Sheffield. So there's a lot of active people around the country who are trying to get people to understand the problems with the system and how we can change it.
And so why do you think that the explanation of how money is created hasn't been mentioned in the news by the mainstream news? Why do you think it's kind of kept under wraps, so to speak?
I think a lot of journalists assume it's too complicated. They think it's too complicated to explain to people. Also, a lot of people just find it hard to believe that most of the money in the economy is created by banks. So that requires some explaining. One of the other problems is that when we started researching this, it was very hard to find accurate information about how the system works, because a lot of the textbooks that they were using in universities were out of date about 30 years ago. They hadn't been updated to account for how the financial system had been changing. So one of the things that we had to do was go back and do that research and put it all together into a book called Where Does Money Come From?, which is published by the New Economics Foundation. And that book explains exactly how the system works now. It's one of the most accurate books, well, it is the most accurate book on the subject. And that's been already used in a few universities in the UK. But with journalists, quite often they don't really understand that. They don't have the time to do the kind of research that we did. And because of that, they tend not to talk about it. But particularly over the last year, people have started to address this more. About you've seen more articles in the mainstream press talking about how money is created, and things like if you want to increase the money supply, you also have to increase how much debt people have and the kind of problems that causes.
And what are those problems, just to name a few?
Well, one of the most obvious things that most people experience is house prices. House prices have been pushed up massively through the hundreds of billions of pounds of new money that banks created to put into the housing market.
Quantitative easing you're talking about?
No, I'm talking about before the financial crisis. Every loan that a bank makes creates brand new money. So if you walk into a bank to take out a mortgage, that money is not coming from anybody's savings. It's actually just new money that's created electronically through the accounting process that banks use when they make loans. So when everybody was borrowing all this money running up to the financial crisis, that was all new money, and that was what was pushing up house prices so quickly. Right. It's not just because there's too many people in the country and not enough houses.
Right. Okay. And what other example can you give of how this creates?
Well, it is responsible for the huge levels of personal debt that most people have, and household debt, because the system is structured in such a way that for every pound of money that is created, somebody also has a pound of debt, because the money is created when banks make loans, which means there is as much debt as there is money. Right. Somebody has to have the debt, and that means that if we start trying to reduce the debt now, what's going to happen is the reverse process. So when you take out a loan, new money is created. When you repay a loan, that money disappears from the economy.
Right. Okay.
And if we have a crisis a crisis that was caused because people had too much debt, which is what the 2007-2009 crisis really was. The answer to that, well, what's going to happen is people are going to want to repay those debts, but that's going to shrink the money supply. And if that happens, you get a recession.
Right.
So your economy starts to shrink. People lose their jobs. It also leads to the kind of instability that we've had, like when you have a bubble, which is created by new money, that leads to a financial crisis. And it also has impacts on the environment as well, because banks have this power to create money. They tend to fund very short-term things that can actually accelerate the whole environmental crisis that we have now.
Okay. So right now there's a debate going on in the EU about whether depositors should help banks, should bail out banks when they get in to a situation, and of course that's all to do with money creation, debt. What are your thoughts on that? Do you think it's something that will be pushed through, and why do you think they're talking about it now? And I ask that simply because it's not something that we ever thought the EU or anyone would be talking about 5 years ago. Depositors bailing out a bank? No way. What are your thoughts?
So the thing with that is a lot of people assume that when you put money into a bank, you're doing it to keep the money safe. What actually happens when you put that money in, that money is no longer your property. What you get in exchange is a promise from the bank to repay you the money at some point in the future. And that promise is the number that you see as your account balance. What has happened in Cyprus and in other countries is that the banks themselves have not been able to meet those promises. They've not had the things they've invested in have lost money, and they're not going to be able to get enough money to repay the people that they owe money to, which is us as depositors. So one way of dealing with that is to actually reduce the balance of everybody's account, which is what they were talking about in Cyprus. When they they described it as a tax, as a levy to reduce that. But what they're actually going to do is just reduce the balance of people's accounts until the level of the accounts matches up with the assets that the bank has. Right. So it's a way of forcing the people who put the money into the bank to take some of the losses.
Right.
Now, the problem is, you could do that if people knew that that was the agreement up front. If you knew that you were taking risk when you put your money into a bank. What happens in most countries is that the government says, if your bank fails, we'll give you all the money back.
Yeah.
And they do that in the UK with this £85,000 guarantee.
Right.
The problem with that is that basically what is happening is the government is saying, no matter what the bank does, no matter how risky it is, we're going to use taxpayers' money to make sure that you get repaid. And that causes real problems, because it means the banks basically have the incentive to take higher risks and to gamble to an extent in a way that might, ruin the bank eventually. So it's not good to be saying the government should guarantee everybody's money in every bank. I think we need to get away from that. But at the same time, we should be upfront with people about the risk they're taking when they put money into a bank and how the nature of that agreement works. And what we want to do at Positive Money is we want banks to provide two very separate accounts. One where your money is kept safe, it's not lent, it's not gambled with, and it just stays there until you want the money back. The other account will be what we call an investment account, where you put the money in. It is invested by the bank on your behalf to try and earn you some interest. But you understand that the money's being put at risk, so if something goes wrong, you could lose some money. And you'd have a clear separation between the safe money and the risky money.
And this would then not devalue, but bring down the amount of debt that we have in the system.
Well, what would bring down the amount of debt is changing the way that money is created. So instead of allowing banks to create money when they make loans, you would allow the state to create money under controls to make sure that it never creates too much. But this new money wouldn't have any debt attached to it. It wouldn't be lent into the economy. It would actually be spent into the economy. So that then, as it starts to circulate around the economy, it can be used to pay off the old debts that we already have.
Right. And do you think this will eventually happen?
I think it needs to happen, because at the moment, the only two ways the government's got of getting more money into the economy is through getting banks to lend more. Now, the chairman of the Financial Services Authority has said that if you do that, if you're successful in getting banks to lend more, it could lead to a future financial crisis, because the whole problem was that we had too much debt. What the government is actually now saying is we need to get people to borrow more to go even further into debt. So we're just on this debt chart, which is going up and up. So that's a very dangerous strategy. The other strategy is to put the money in directly through the Bank of England, and one way you can do that is through quantitative easing, which is effectively creating money and using it to buy government bonds from the financial markets. Now, the problem with that is that the money goes into the financial markets and it pushes up prices of things like bonds and shares. So it's really good for people who trade the financial markets and for the city, but it doesn't really have a big effect on jobs or the real economy, the shops and the businesses and the factories.
And the everyday person.
Exactly, yeah. So what we're saying now is, instead of allowing money to be created by the banks in this way, or by the Bank of England and put into the financial markets, what you should have is the Bank of England creating money, but putting it through the government budget so that it actually is spent into the economy. What that would do is it would, that money as it comes into the economy would actually employ people, it would get things done. I mean, we're suggesting one thing you could use this new money for is for building affordable housing, because we have a huge housing crisis, which was actually caused in the first place by allowing banks to create money. And then when it employs people, they spend that money, that gets the economy going again, and it makes the whole economy safer as well.
So why do you think they wouldn't do it? What's the main reason why they wouldn't?
Well, it's partly it's ignorance of how the whole system works. So there's if you start talking about the state creating money, people think that it's this is what happens on the way to becoming like Zimbabwe. So where you had the government creating far too much money for the economy and prices just started rising. Obviously, you're not going to do it like that. It's not hard to see that that's a bad idea. You need strict controls on how much money can be created, but when you allow the banks to create money, those controls never worked, and also they had the incentive to create as much money as possible, because the more money they create, the more they lend. The more they lend, the more interest they receive, and also the more they're lending, the more prices are going up, so the more confident they are about lending even more.
Vicious circle.
Exactly, yeah. It's completely a vicious circle. So I mean, it does have to happen, really, because we're in a real catch-22 at the moment. What we want to happen, what the government wants to happen, is to get more money into the economy, but that requires that people borrow more.
Mm-hmm.
And the problem was that we have already had too much debt,
Mm-hmm.
which means that we need people to pay their debts back.
Yeah.
But if they pay their debts back, then
It
money
reduces.
disappears.
Yeah.
So we can't do both of those things at the same time. We can't get more money into the economy and repay the debts unless we're doing one of the ideas that Positive Money is putting forward, to have new money created, put into the economy through government spending, which would then be used to pay down the debts.
Right. Okay. So you wrote a book.
Yes, yeah.
Would you like to
so
share that with my audience?
Myself and a colleague wrote Modernising Money, which explains what the problem is with the current system, or why the monetary system is broken, and how we can actually fix it. So that's quite an in-depth book, one of the most in-depth books that have ever been written about how you fix the entire monetary system and how you can stop banks from being able to create money and cause the kind of financial crisis that we've had over the last few years.
So the book again is called Modernising Money, Why Our Monetary System is Broken and How It Can Be Fixed, and it's by Andrew Jackson and Ben Dyson. And am I correct in saying that this is a book that you said is being now used in economic courses or universities, did you say? Or was that another book?
Where Does Money Come From?
Okay, Where Does Money Come From?
It's an explanation of how the whole current monetary system works. And this one is more about why it causes all these problems and how we can fix it.
And why, what's the name of the form of the book that you
Where Does Money Come From?
Where Does Money Come From?
Yeah.
This book did you co-write that as well?
So my colleague Andrew Jackson and some colleagues at the New Economics Foundation worked on that over about, two of them were working full time for half a year to do all the research that was necessary for that. Wow,
Amazing. Okay, so thank you very much for sharing the vision and the cause of Positive Money. And where do you see Positive Money going forward from this point onwards now, and how can people get involved?
Yeah, well, we've had some success up until now in getting the message out there. Where things are going next is we're about to launch a campaign which is calling for the government to actually take back some of this power to create money and use it for the benefit of the whole economy and ordinary people, instead of using it to inflate the financial system, the financial sector. So we're launching this campaign to get new money into the economy to create jobs. And we need people to sort of help to get that message out there and to get people aware of that. So there's, if you go to the website positivemoney.org, there's a load of things on there, more things you can watch to learn about how the system works, but also there's details of the local groups around the country that you can get involved with.
Right, brilliant. And what's the local chapter in London? How many chapters are there in London?
There's a couple of groups in London, and there's also a reading group who are working through the book as well.
Okay.
In Lambeth.
Okay, yeah. Which is my area actually.
Excellent.
I've been to one of the events, or one of the reading sessions, so to speak. Okay, that's fantastic, Ben. Again, thank you for your time, and thank you for taking up the mantle on this. You know, it's very important because money is an intrinsic part of our everyday, and so many people are just drowning and dying in debt and have no understanding as to why. And I think when you understand why, it makes you feel more empowered about money and your situation and the activities that you can do to try and change the system, if not for yourself, then for your children. So
Sure,
thank you.
Sure.
Okay, then.
Thank
Bye-bye.
you very much.